Okay guys, in this example we're going to be covering a crude oil gap up origin retest for a long. Very similar to a previous video that we've done covering a gap retest long opportunity in crude oil, and this is just another trading example of the same type of setup, but obviously a different trade. And so things to keep in mind for this particular setup when we review it. This occurred on multiple time frames. There is a strong move up from the area of interest that we were looking to get long at, and it was a gap up waiting for the pullback as a retest to get long. So just like the last trade that we did, last trading example where we covered a gap fill, gap retest long, however you want to call it, this is very similar. But there's a few key differences, but it's still the same pattern, the same price action, the same setup, same rationale that we're looking for. Okay, so let's get right into it. And again, if you need to review these sections in the course itself, go back to section 1 and 3, and you can brush up on all the little nuances and everything that you need to know to fully understand this type of trade. So let's get right into it. Okay, so number one, we have multiple time frames. You can see here, we highlighted this. We have 1, 2, and 3. 3 smaller time frames that confirm or add conviction to our trade idea, to our trade setup. Bigger picture, you can see here on the daily chart, we're almost range bound. We hit a high, we pulled back, we rallied up and retested, we pulled back again, after putting in a base above this $58 to $60 level. And again, we had a little bit of a retracement, strong move up, and then we were retesting this strong move up. The idea being, obviously, to get back up here above this 63.40 area, ultimately up to this 66 area for a long opportunity. That was the idea, that was the plan. You can see here there was a spot for our target up here above 62 that we were looking for, and we'll get into that a little bit as well. We had a very strong move from the area of interest, our AIO for us. Right in here, you can see the strong move from about 60 bucks all the way up to almost 62.50. So it was definitely a strong move from this area that we were hoping that price would retrace to, get back to give us that chance to get long. Okay, you can see it on the 60-minute. So there's our second time frame. We bottomed out, paused, and then had an explosive move up, creating the profit potential. If we were to get a move back down into this area, the rationale would be lots of room back up here to the upside. You can actually see on this day session only chart on the 15-minute, really small time frame, that we had a gap basically up at 62. Coincides with our level here on the 240-minute. So we were thinking, in the very least, to get back up to the origin of the regular trading hours for this particular product for crude oil, right around 61.60, ultimately fill in the gap up at 62. Previous close was 62.04. So those were our targets up in here. Now targets are going to change depending on how price comes into your level, how price comes into an area of interest. We may have to adjust our targets, but for us, we really don't have to do that because we systematically take our profits. We have predefined profit targets before we even get into the trade. We know how much we're going to risk. We know how much we're expecting to make in terms of the profit potential, thus creating our risk to reward ratio. And if you start messing with that, then you're messing with the parameters of your trade, and that's something that you don't want to do. Okay. It's better to leave your target and your stops and everything alone. Definitely don't want to touch your stops. You can move your profit targets and adjust those as the market comes into your level and as you get filled, but you should already have a plan of action for your trading plan as how you're going to take profits in the first place. And for us, it's a combination of a mechanical 1-to-1, 2-to-1, and then looking for the 3, 4, 5-to-1 risk to reward ratios, and we base that on price action and price levels themselves. The mechanical 1-to-1 2 to 1. That's simply to make sure we're taking profit as the market makes it available to us, kind of thing. So the other thing in here is it was a gap up. You can see on this day session only chart, we gapped up from 60.29-ish, 60.20-ish, gapped up, rallied up, and then this next day we retested this area that we gapped up from. And this shows us a nice strong move from here, basically 60.60 up to 62. So it's about $1, $1.50, $1.40 in profit potential to risk about 20 cents. Not a bad risk to reward ratio. It's actually pretty good. Really good. So again, we have multiple time frames, 1, 2, 3. We have a gap up in the direction that we want to get into a trade, in this case long, and we have a huge move away from this area, and that's confirmed on the multiple time frames. Okay. We were looking for price to come back down into this area and bounce off of this level. The strength of the initial move up out of this area is what really attracted us to this potential opportunity. This move from 60.50, 60.20 up to 62, you just can't ignore that type of move. And in that type of move, you're going to have the origin, or where it originated from. Where did the buyers step in and actually take the market up? And so we're able to identify that by going to the day session only chart, and we see that there was a 15-minute candle at the start of trading for crude oil. Its regular trading hours had a nice strong move up and really never looked back. You paused here, you had a little bit of supply, a little bit of resistance right there. We paused, but ultimately broke through all of that, and the origin of this entire move originated right in here between 60.55 to 60.76. We have to be patient. Once you see this type of move, a lot of traders will get sucked in and say, with this type of move, it's got to keep moving up. We have to keep moving up. So let's buy up here. Let's buy up here. It doesn't work. You need to wait for a pullback. You need to wait for a price correction. Wait for the market to get to an area that it showed you that buyers were present. Where was the area that buyers were present that started the move? That's what we're looking for. And that's this. Very basic setup. It's not complicated, but you have to know what you're looking for. And for us, we define our opportunities using these parameters. We have our multiple time frames. The confluence of this adds to the conviction. We have the strong move away, and the risk to reward and the profit potential is there. We're risking 20 cents to make $1.40, $1.20, even $1. If you risk 20 cents to make $1, that's still a 5 to 1 risk to reward ratio. Not a bad opportunity at all. If you're taking 5 to 1 risk to reward trade opportunities, your win percentage does not have to be very high. In fact, it can be less than 25%. But these are the type of trades that you want to look for. These are the big winners. There's only really 3 outcomes in a trade that you want to happen. Big win, small win, or a small loss. We don't take big losses because we use stops and we define our risk. But the other 3 play out, and this happened to be one of the bigger ones. This was a big winner. So hopefully you guys found this helpful. These are the type of patterns and the price action and really the opportunities that we're looking for, not only in crude oil. I know we've done a bunch of crude oil examples, but this type of stuff plays out at any of the futures markets. The E-minis, the currencies, gold, crude, doesn't really matter, bonds. These are the type of things that we're looking for. These are the type of setups that we're looking for. So hopefully you guys found this helpful. You can see here's the entry down in here. You simply place your entry, somewhere in this zone with a stop below it, and then systematically have your profit targets already identified prior to executing the trade. So you know your risk to reward ratio. And so this is one of our favorite setups. Again, I know it's similar to the ones that we've done before in terms of the videos that we're releasing, but if it's one of our favorite patterns, you're going to see it quite a bit. And so hopefully you guys are finding this useful and finding some information that you didn't know beforehand, and are able to use this in your own trading. And yeah, like I said, this is one of our favorite setups. Gap fill, gap retest, big strong move away, multiple time frames. So that's it for this one. Let's move on to the next trading example.